let's move on to the third panel of the day, which is CX 2030, digitally driven customer centricity in NBFCs and Fintech. To moderate the panel, I would like to request Farooq Patel, Head Customer Experience Fibe India, to please come up on the stage. Can we please welcome him with a huge round of applause, guys? Come on. We want our claps to make some noise. Okay, thank you. Thank you so much, sir. Followed by the panelists, we have Pramod, Kathuria, founder and CEO, Easiloan. Can we please welcome Mr. Pramod, guys? Come on. Then we have Hitesh Thakkar, Chief Operating Officer, ITI Mutual Fund. So let's welcome Mr. Hitesh Thakkar, COO, ITI Mutual Fund. Let's welcome him with a huge round of applause, guys. Thank you so much. Good afternoon. Over to you, guys.
So, good afternoon, everybody. I know it's post-lunch and the insulin spike would be really high. I know we were trying to ensure that the energy stays there. I love the ice cream, definitely, because it's summer and we really want to ensure that our body stays cool. Today, the session that we're looking at, and I'm sure all of you are in this GPT era and the 225 era and want to ensure that CX 2030, what is it like? The CX 2030 of customer centricity and the AI and the personalization. And we have two excellent legacy leaders sitting with me on the right, Mr. Hitesh Thakkar, our CEO and of ITI Mutual Fund. And we have Mr. Pramod, who's co-founder and CEO of Easiloans. So both are coming with a strong finance background to help us understand what is it like CX 2030. So the first question, I understand we all are in the hyper-personalization stage in everything that we do, right? So, sir, in Easiloan, what is that, how are we shaping hyper-personalization or AI in the easy home loan sanctions that we are currently in 2025?
Good afternoon, everyone. So Easiloan, we started in 2021. In fact, the concept came in around 2020, and which is where I think we were trying to see the world in a very different way. And it was kind of forced upon to us as a consumer, as a provider of services, and also as a capital provider, that to resume business or to conduct business, you will have to think a little out of the box, and which required a fair bit of digitization in the process. And powered by the entire startup ecosystem, the fintech ecosystem in India, one wanted to really improve a bunch of things. One is how you can improve the speed. The second is you wanted to make it convenient, digitize it, remove human error, and so on and so forth. And at some point in time, also look at how is it that you can use these data sets to improve the offering of the product. And which is where I think even the personalization aspect comes in. So hyper-personalization to me, and I'll not say what is sounding fashionably good, because obviously everybody wants hyper-personalization. There are certain commodity kind of products, financial products, where personalization is more aligned to finding the right lender, finding the right product, and finding it in a platform which is more convenient from a consumption perspective. Because it's not something that you wear, it's something that you eat, that you will have a very different choice flowing in. It is more to do with your consumer consumption pattern. So, and I'll talk about Easiloan, but generally dissecting it, that there are certain products which are more like commodity, which are must-have to consume your purchase, and where convenience, your platform, your availability, and the right lender choice makes a huge difference. So if I'm buying a mobile phone, I'm not too, may not be too keen, and I'm saying for the general public, on what is the personalization in the loan happening. So long it is getting me the highest value in terms of, say, a cashback, say the medium, or say the timing. Similarly, for a personal loan, it is really about ROI. It's about the timing, and not as much about any next level of personalization. But when it comes to home loan kind of product, which is where we come in, and which is there is a huge scope, because there is a diversity in the customer base itself. There is a salaried person who's got a very different algorithm to be evaluated. Then you have a non-salaried customer where the business kind of start coming in to play from an evaluation perspective. Then you have different kind of properties that you're buying. So you're buying a developer property, which has its own nuances, and then you have, resale. Now the resale and different pin codes, different cities, and there's whole set of complexity and diversity which comes to play, and which allows us to sort of personalize it or hyper-personalize it to that extent. So what we do is we use the machine learning tool to build our AI, wherein essentially a fair bit of process is smoothened on the back of what we already know of the customer. So typically a journey is, and these are really toolkits, how you want to autofill, auto-populate information that is already available. So right up front in the journey, if we request customers to upload some of the documents, then we don't ask the basic documents at all. So all of it gets auto-filled, auto-fetch, and related information starts flowing in the system. At the back of those information, we are also able to populate based on the bank's, credit logic or their guidelines, which are the banks who are in the first place keen to work on this customer. So if there is a customer seeking for a resale property, non-salaried, so we know that out of the 35, 40 banks that we work with, maybe 18 banks are more keen in this kind of customer. The moment we know the bureau score, we also know that of the 18, only 9 are interested in this kind of customer. So we don't give those offers which are not aligned to the customer in the first place. So that's where the personalization comes in. Then our ability to also read into the data and the past trend, we are able to also set it is most likely for you kind of thing. That your persona of a customer is typically going for this kind of loan because of these ABC benefits, which is what we highlight. We try to highlight those 2-3 benefits which are more aligned to that customer persona. And there's a lot of it. I can go on, but I'll just kind of summarize, saying that depending on the product, there could be personalization in itself. Some of these products on the financial side are very commodity based, where the personalization is not as much about, the product is really, it's unlike a wealth management where you sort of curate the product. It is all about getting the time and the medium right. And in home loans, yes, the whole playbook comes to picture.
So I absolutely agree. So I'm just a connecting question to you, sir, on this. Is hyper-personalization a need or luxury in the mutual fund industry? And what is your take on that?
First of all, thanks, Farooq, and thanks, Krypton India, for arranging such a fantastic seminar. So I'll just give you a brief perspective about ITI. We started a business 5 years before, and we are a mix of physical and digital. Our focus is on 3 P's. One is product, its performance, and promotion. These 3 parts we need to do as per the regulatory compliance, because the way CB is coming out day in, day out, the circulars and all, and inculcating into digitalization, this is very critical that we don't enter into non-compliance zone. So in 5 years journey, we have now 10,000 crores of assets, mix of source through physical and digital. We have 28,000 partners who are working for us, out of which 16,000 partners are already active, means they have some business with us. So what we have done is we focused on the core processes which are impacting to the output of the end customer. Like, in our business, product, how you are selling, how the product performance is coming. And for that, whatever technology needs to use, we have inculcated from day one. As far as other parts are concerned, we are very cautiously deploying each and every technology as a holistic way. So I'll give you an example. Let's say a customer or investor gives his money to invest in one of our fund. Then his expectation is, I am getting a right communication at the right time, and I am getting the right NAV. So though all these communications are so aligned, internally processed, that within 24 hours he get updated only 3 times. Because as an organization, we want peace of customer, not pieces of customer's mind. So usually what happens, you start bombarding. The way he has given an application, you start sending messages, emails and all. He knows that you have submitted. Now the point is, he wants to understand what is the NAV and at what time I got the money invested. These all are critical parameters. So what I feel, internal process we have fully digitalized. As far as sourcing business is concerned, we are conscious because mutual fund industry AUM is close to 67 lakh crore, and you have both the kind of people who Gen Z wants only tech, so they will do transactions only tech. They don't want to talk anyone. They just everything on their mobile. And there is another class of people who have a high value, high net worth people. They want a personalized touch. So we have created a hybrid model. Our presence is close to 47 locations, and digitally we are present across India, all parts. So we have an Android app, iOS app, which is actually straightforward, no complexity. Just go do your business and you will get the right output. Similarly, we have an investor app as well, Android and iOS, and this is helping a lot. We have not cluttered that app. We have made very simple, straightforward, and I think that's what is happening. And what we are seeing the trend, Farooq, that our 60% transactions are coming online, but our 60% business coming through physical mode. So we need to understand the consumer behavior, and based on that, we are adopting the technology. So transaction volume will be higher on a digital platform, but the value we are getting is a physical, because someone wants to invest 1 crore, 2 crore. He will definitely prefer to interact, wants to understand, and that we need to have that presence to communicate him right. So these are the, our vision. And as far as AI is concerned, yes, we need. At present, we are not using on a front-end side because of various regulatory challenges. SEBI has just now come out with cyber security framework circular, where there are lots of encryption, data privacy and other things which they wanted us to implement. So we are cautiously implementing without any hiccup on times of non-regulatory. We are using AI for internal data purpose, internal data analysis, and that is helping us for a cross-selling and upselling.
I completely agree. I guess in the means of using hyper-personalization, or sometimes it's also important to understand that do you really need, I think quite rightly said, sir, because if you are just getting bombarded every day, when you get up in the morning or you sleep in the night and you're getting messages, WhatsApp, IVRs, voice bots, and they have been used because you want to be in the vogue, it doesn't really become a hyper-personalization. So yeah. So in the Phygital India, the touch and tech that we're talking about, how relevantly, I think it's in this era, ITI as an organization, and sir, and you've been in this industry for very long. What do you think in the Phygital tech in touch is relevantly required today?
Yeah, so I personally feel you should not get a complaint first. If you are getting complaint, that means some processes are not working well, right? So as an organization, since inception, we have built a proactive approach rather than reactive approach. So most of the investments are on a proactive side, not on reactive side. So what we do is we make sure the front-end system, either technological or a physical, has enough checks and balance that we don't get the garbage. It's not that we are not cautious about the sales, but we ensure that whatever we are getting, it is right in letter and spirit, because there are other norms the way NBFC and housing applies. We have also same KYC, anti-money laundering, no third party, nothing. So all these things we ensure that it happens. there is a continuous training inculcated on the front end, which makes sure that they're aware with the right regulations and what are their implicated to them. What is the implication? So what we ensure that we try to upgrade the knowledge of our distributors also, who are actually our marketing people. So they are well aware about what changes are happening and what regulations are expecting from the distributor to ensure that the transparency, no mis-selling. So there are some tools we have inbuilt it, which gives us the trigger end of day that there are mis-selling cases, just look into it, and we have the dedicated team who takes care of it. But as far as spread is concerned, what we have done is we have identified 30 locations where 85% of industry AUM is coming. So what we have done, it's a part of T30, B30. We have opened a branch since inception, and we are able to give a personalized touch on those locations where industry AUM is 85%. And for digitally, anyway, we are controlling from centrally, and each steps, how the application of the investor moves, we have a breakup MIS, which is helping us that at the end of the output is on time basis, and there is no, errors. So I'll give you the example. Last 3 years, ITI mutual fund, we have the least complaint in the industry. And the reason is all processes are divided. There is a cautious control. There are groups where we get early triggers. So I'll give you an example. Last year, we had one NFO, large and mid-cap fund, where collected more than 50,000 application in mix of online, offline. And so our business comes like one way is the application, transaction, investor detail, and other is the money. It may come to online, offline, whatever. We have ensured within 3 working days, every application has a quality check and endorsement has been done. So you can understand we have divided each process at a so micro level, and everyone is able to manage those. It's not that we don't want to process, but we have a mechanism that the transactions which are not in good order, you convert it before due date. So that's helping us in terms of ensuring there is no complaint at all. And the setup which we have created, I think we are quite comfortable till the time 50,000 crore assets we achieve. We will be able to manage this very smoothly, the kind of setup that we have made.
Nice. So, in the digital onboarding and the lending space today, what's your take on this in terms of easy loans? How is it making different than others? And
yeah, sure. So just on the other part of the digital landscape, one or two things. I fundamentally think that when we try to do stats on a national level, a lot of data points kind of look in a certain direction, right? So of a 1.45 billion population, if you have 1.2 odd billion mobile connections, which means that some 80% penetration is there from a mobile side, and give and take, there could be multiple mobile connection with some individuals and all that. Again, there is some 900 million users of internet. So what it is basically saying, if you were to just gross it out, the stat is saying that digital is the only way because everybody is there one way or the other, right? So which is also a fact. These are hard numbers, right? So these are facts. But I think where the physical part comes to play and becomes very, very relevant is there is a tier 1 and there is a tier 2 and tier 3 market. Now, tier 1 market operates slightly differently from a consumer pattern perspective. And their ability to grow very, very fast, almost like a, hyper speed on adoption and new products is very high on the digital side. In fact, if you're not available on the digital platform, you may likely to let go of the customer base. And that's why, while the growth there is still about in single digit, about 7 to 8%, the tier 2 and tier 3 market CAGR is about 15 to 20% when it comes to financial products. So that's the growth in tier 2 and tier 3. However, all of it is not digital. There's a significant part which is in physical, and the reason thereof is not everybody is as comfortable dealing with it, even if there is access. So the data is saying they have mobile connection. The data is saying they have internet. They're part of the 900 million internet user. But when it comes to financial transaction, they're a little shy because they're not comfortable doing a lot of it on the digital side. Hence, a physical touch point becomes very, very important. It's tactical, and I think businesses do take note of, and that's why there's a CAGR which is reflecting, right? There is a 20-25% growth in tier 2, tier 3 markets. So obviously, a lot of companies are doing a lot of right understanding on this. But that's the landscape. Just wanted to touch, I mean, the data, gross data tells you digital is the only way. But the moment you dissect into tier 1 and tier 2 and tier 3 separately, you'll find tier 2, tier 3 very high on mobile, very high on internet. And they may be watching reels, they may be doing a lot of other social connectivity, and they may be using great. But on the financial consumption side, you have to create a little bit of infrastructure which is physically supported.
No, absolutely agree. I think this is a very strong and valid point, sir. So on the digital onboarding stage today, everybody is using exclusive stacks, right? You know, it could be instant KYC, instant loan. That instant has hooked to us so strongly. Sometimes I feel there's a social responsibility not making instant so instant. So what's your take on the onboarding stage? Should it be faster? Should it not be faster?
So onboarding is a very comprehensive thing, and I'll give this. Why this instant fascination is because, see, you have to also understand who's the consumer. 65% of the consumer today are below 35. So, abhi wo to, you know, they don't drive on 30, 40, right? So they drive on 50, 60. So that reflects in everything from the choice of food. So they will not go for, long bake kind of thing. They'll go for a fast food. So everything, it's kind of fundamental to the consumer and their requirement. Also, with digital coming in, your need to know everything instantly is very high. So is the case in onboarding. So your ability and your aspiration to get closure of your application, get a confirmation, application accepted, check that its status is high. It's not financial only. It's also with booking the tickets. It's also with airlines. It's with everything. They want instant confirmation of things, and quick commerce, if anything to go by, they want food also instantly. So that's how it is. What we do, or what the industry has been able to do is, they've been able to, so there's a framework, right? So you have a requirement from the regulator. Then you have a requirement from the consumer, which is fast, easy, least cumbersome. Then you have a requirement which a capital provider or the platform itself has to do, from knowing the customer, from actually ability to get the money back, and whatever the case may be, right? So these frameworks are something that one has to maximize. So regulator has to be respected, because otherwise today's quick job will end up creating a lot of pain in the future. And about 7, 8, 10 years back, the innovation, the flag bearer of innovation, so to say, or the fintechs were thinking, just making fast is going to be great, which continues to be thought. But now the smarter companies or the more visionary companies are looking at it from a regulator angle into it. So what is the right governance? What is the right framework from a regulator perspective? And then let's innovate. The aspiration is still to do it instantly and within 24 hours. Not onboarding can be instant, right? So you have the account aggregator framework, which allows credible information approved by bank, government. It's just that you need more and more data sets available. It has to be exhaustive. It has to be something which is universal, so that one doesn't have to look beyond. Today, that's not the case. So account aggregator gives you a certain level of data, but it doesn't give you exhaustive data. Then you have India Stack, obviously helping you from the KYC perspective. Again, the acceptance of that is, I would say, more than 50-60% today, but it still needs to go to 100%. For you to commit to onboarding across product, across platforms instantly. So I think this is where we are playing. Onboarding instant is great, good, should be done. There should not be any reason for somebody who's, so we've got what, some 900 plus 1.1 odd billion Aadhaar links. So which means that almost more than 80-85% of the people are already having Aadhaar, so to say. If you have those data available, and onboarding, it typically is about getting the base level of KYC done. getting the application completed, getting the checks done, should be able to be done so long you have the imprints right. Like I said, so there is a sandbox with where it is possible with India Stack, account aggregator framework, and then you have all the microservices coming in. Somebody's providing something, somebody else is providing something else. But eventually it all gets into that, because if you're taking Aadhaar or Bureau from other microservices, eventually it is part of the India Stack. So I think it is totally possible. It's just that it has to be exhaustive and it has to be accepted by all the capital provider, whether it is the bank or the NBFC.
Absolutely. So what should be the customer experience benchmark? The following question. In the tier 2, tier 3, as we say that one size does not fit all. So in the mutual fund industry.
So very valid questions. So first of all, though, I want each and every employee of my company first to be customer. So my IT head is invested in my mutual fund, my compliance head is invested, my risk is invested, and my investor service head and my sales guy is also invested. So first and foremost, I make sure that they are happy. If they are happy in my tag, so that means 90% you are done. Then 10% comes with the, based on the feedback and back-end crunchies, issues which you face. So what I personally feel is that, you need to have a straightforward tag in place, which helps you very quick onboarding. So unfortunately, as on today, we all are part of BFSI segment, but we are not able to use common KYC. So what is happening, the RBI guidelines, all banks are following KYC, but for mutual fund, we have a central registry from where we are taking the data through API. Government is working, Ministry of Finance is working, where you will have a single KYC where all the data are available related to client and everyone can absorb. So if that comes, then life will become very easy. Today, the challenge in mutual fund also, we are facing onboarding new investor. So as a MFI industry body, I'll give you some statistics. You will be surprised that we have a 67 lakh crore of AUM. More than 15 crore Demat accounts are there in India. More than 45 crore PAN cards are there. So for mutual fund investment, you need a PAN card, bank account, which anyway we have the sufficient bank accounts. And your identity proof means through Aadhaar also you can do. But unique investor in mutual fund industry are 5 crore 40 lakhs only. So the biggest problem is not that they don't understand mutual fund now, because the MFI has a very exhaustive drive. They did mutual fund sahi hai, and it has created an awareness. But the real challenge is onboarding new customers. So for that, we have the same stack, like, you come on my app, understand what is mutual fund, then select your product. We'll disclose some risk point of view. Then if you are not KYC, onboard on KYC, we have the Fintech integrated on our own platform and through whitelisting. So why we have done a whitelisting? Because as an organization, we own it, whatever is happening on our platform. So we have done a whitelisting and we ensure that within 24 hours he is onboarded. So there is a backend agency also. So the controls is with us. So this we make sure that the continuous smooth onboarding is happening, because that is the first experience that investor will. And if his onboarding is good and your products are performing, then there is a sky is the limit. So if you ask that onboarding is the crux, yes, it is crux. At the end of the day, your core product is also important. Like for me, mutual fund, then investor look at it how the risk adjusted return you are giving. So that will be the core, supported by your infrastructure for onboarding, servicing through various modes, chatbot, or maybe WhatsApp notification and all. So that we already created to ensure that like scale, when business pick up the scale, you are on track. And speed and accuracy, because today people don't have a patience. Like if your mobile net is not working in your blink of eye, you start frustrating. So that's I think a new avatar of the tech. But so you need a speed, yes you need, But you need accuracy, yes, because we are into finance business and we are into business that we are raising money from the investors, their own money. So we need we always ensure that if I have taken a money, then his application is proper. That means he is going to get the unit allotment. The problem is if your account is debited and then you says that so this is not, you are not KYC compliant, you need this and that, then he starts frustrating. So we make sure that your speed comes with the accuracy and equally risk management. Because, for just give an example, today Fintech gives a debit from debit card, right? But we don't accept as a mutual fund because we are not able to get validation of third party through debit card. So we are not integrated, and we politely create a pop box where we say these are the options you do investment by this tech, but not debit card. So this is something investor wants. If you are not able to deliver, let be transparent. He is okay, like to use different modes, because at the end of the day, it is a mode of payment. It is not the crux of his intent. His intent is to invest in mutual fund. So that we do behavioral analysis based on the feedback of the investors. We interact with the distributors. I think my HO team travels to T3, tier 2, tier 3 cities also. We take some feedback, like what's happening, what's your, turn. And frankly, I have invested other 23 mutual fund also. So I get various notifications. So I also come to know what's happening in the industry, and it is right fit for me looking at size and scale of my business.
Thank you. So on the benchmarking of CX, or in the Gen Z and the Alpha and the Beta world, what do you feel in the home loan section is what is important in the benchmarking of driving the CX experience? And what could be the benchmark in the home loan section?
Home loan thoda unique aa jata hai. So when you're buying a property, you are in the highest state of your mind. You're very happy. I've not come across people who have just booked their property and feeling, oh shit, I've done something wrong. You're typically in the highest state of mind. You're very jubilant. You're very happy about it. You will probably go to Shirdi and you'll do all that, kind of celebration and things like that. When it comes to home loan, almost 100% of the cases, I haven't come across a person who's felt great about taking a home loan, while the purpose of taking a home loan is to actually buy the property. So that's where we are. So customer experience, yes, is a tricky play there. You have the customer who wants to buy a property, and buying a property doesn't typically have either I will self-fund it or take a home loan. It is almost always that I will take a home loan because I can do 20%, maybe I can do 25%. Those scenarios evolve. So I think where the typical fundamental checkpoint is on the customer experience is to be able to put up very clearly the expectation versus the transparent charges, the ROIs, so that there is more trust in the whole process. And typically we have customers who are offered little aggressive on the rate, or probably not told upfront about the processing fee and so on and so forth, or if there is a requirement for insurance or anything of that sort. And hence a customer feels that the experience is very bad, not for the digital, physical and all that part, which is also a case. So that's like skin deep treatment. But on the surface is, first of all, are we able to put it up front? All the charges, are we able to, in this age in time, value the customer in a way that they can operate, apply from the comfort of their location? And then which is where the step number one. Step number two is, are typically the human errors which are possible, and which is where the automation and the digitization comes into play. We've seen the wrong spelling in the names, wrong addresses, mobile numbers given wrongly, and there is a lot of experience which goes in customer only trying to tell that my phone number is not captured rightly, my email is not captured rightly, I'm not getting the SMS, I'm not getting the email, and so on and so forth. So I think a lot of it is weeded out with the digital application. Like I said, there are now proof checks with email going to you, there's a OTP going to you, there's a lot of authentication which is happening. So the customer consent, which is also a guideline and a regulatory requirement, is something that I think is part of the user experience, so that everything is done with consent. You're telling the terms and conditions upfront, and then there's no drop-in moment of truth, then walking into something and then realizing whether it is what it is that you wanted to sort of service. Third thing is coming into the adherence when you do anything which with the regulator, which is where we are talking about doing it right. So if the lender is able to follow the guidelines, so banks are typically have a certain LTV, loan to value ratio. There is a like I said, there is a processing fee and all that applicable. NBFCs on the other side, and in housing finance, in home loans, the NBFCs are called HFCs. So if the HFCs are able to do any innovation, which is a delight moment. So I think Fintech and housing finance company have this huge opportunity of delighting the customer beyond what bank can do, which is where the whole set of offering come in. And the CX excellence, according to me, in financial product is about getting the best returns, best value, fundamental. So if I have to stand in front of a LIC office, with all the respect to LIC, if the experience, so to say, it takes a little longer and all that, but I get the highest value, I will still have a certain equity for LIC. I'll still go to LIC in some of the cases. So fundamental is how you create value for a customer, which really originate is a genuine understanding of the customer and how you can serve it. Number two, creating a medium where you can have less of human errors, where you are able to transparently sort of present everything upfront, so there is more trust in the whole process. And thirdly, adherence to the regulators. So these are the pillars. Then how do you innovate? Obviously, you have to, so if you have a 5-page application, can you crunch it into 5-page turns on a mobile app? Something great, because you can auto-pick information on Aadhaar. You don't have to ask the date of birth, father's name, address, and everything will get auto-filled. You do not have to ask multiple things again and again. So the moment you have PAN, you also have the bureau score. And I think then there's a already used playbook around it, but it has to be used with sophistication and understanding, so that one is taking consent and then using that. I mean, that's where the balance remains.
Absolutely. So in the chase of delivering great experience, right, we all want to make the delight moment for the customers, but sometimes data becomes too sensitive. I'll give you my journey when I was buying a house. I was buying a house from a bank, and I was taking a loan from the bank, but then this NBFC came in. They knew what I wanted. They knew exact EMI amount, the exact ROI that I wanted, and said, we have it ready, just say yes. And they could do that in 2 hours. But the point which really came, was it right for somebody to have my data? So on that, just on that part, would like to ask you, sir, do we really, are we compliant? How do we balance, digital and compliance together in this era that we are right now? One more example, you have a Park Plus app. If all of you using Park Plus app, you will always see that among your friends or among your family, whichever car that person has, it will start listing that information. Sometimes it takes away the excitement that my neighbor bought a car. I already got to know from the Park Plus app, he wanted to actually distribute sweets to me. I said, congratulations. But then how did you know? So how do you want to, what is our social responsibility here, and how do we balance it?
Now, while I do agree technology is for the conveniency, but it is not at the cost of data breach. And that's what the regulator has an expectation. In our parlance, CB is very strict. They have an integration of each and every ports which we are using for public facing. They have a monitoring cell who gives us some triggers stating that this public IP there is a attack, just see and confirm. This kind of setup CB has created, and we are in letter and spirit we are agree with them that whatever customer investor data we have, it should not be go outside. So what precautions you can take? So we have done a lot of things. We have the SOC, PAM, applications to ensure that that we are not going outside. Relevant upgraded firewall. servers are upgraded. If clouds we are using, they have a difference, you know, your admin key and the user keys are different. So a lot of checks and balance we have created, you know, which ensures that your data breach doesn't happen. But in spite of everything, it may happen. But tomorrow, I do not want to be in a list where I have certain defined guidelines or a manual or a process which says that you will take care of XYZ to ensure data privacy, but you are not following. So what we do is whatever we have wrote that we are following, that we ensure. So walk the talk kind of philosophy we have implemented. And there are certain data don't need to certain users. So whatever applications we have given, those applications are very customized, limited to function A and different from function B. So this we have ensured we don't give direct access to the live servers to any vendor. We have a separate setup, UAT environment that also given through the PAM module, through the admin. So a lot of things we have created. We have a well-defined agreements with the vendors. You know, whatever they are accessing are monitored, and we have a right to audit also in case if it is required. So these things we take care, and we have a SOC in place which monitors 24 hours, and there is an auto trigger to the respective authorities in case something happens. And it's a, so all these technologies which are available on cyber fraud side or a data protection side that we are consciously using, and we make sure that data doesn't get diverted or misused, because if something is happens, it is a very huge reputation risk, because you know you need to disclose to the regulator. So all these things are building a brand and business, that too in a responsible way, is very critical and important for our business.
I'll just add to what Hitesh Bhai just said. He's told some of the points from the institution point of view, right? From the company's point of view. So I'm saying, and this is my view, that customer experience, obviously you can make it highly tech and highly jargon based, but like how we look at a low code, no code kind of simplicity to few things, right? So every time you don't want to develop a sort of a app, you can use a low code, no code and go with the simple way out. So from a customer point of view, the CX, how should it look like? According to me, first of all, and there is a law there's a certain rule wherein almost 9 times more spread happens when there is a negative moment of truth. So the word of mouth for a good experience is X. Word of mouth for a bad experience is 9x. Typically, if I go and have a bad food somewhere, I'll talk to 9 times more people. Good food, I expect, a good food. If I'm paying for it, I might as well get a good food, that experience. So when we look at, to just taking a leaf from what Hitesh was saying here, one is to look at there should not be bad experiences. So the first fundamental, value for me to have a good CX framework is to take out the bad customer experiences, to take out those cases wherein there was a genuine requirement, but it could not get served. So fundamental, social media, if you have a social media out there, if you have a customer care out there, if you have a helpline out there, is it servicing? If you have a grievance email and then it is not servicing, these are fundamental. So I think, you have to get the bad experience, bring it to zero, and then obviously try to delight the customer. There is a frenzy of people trying to innovate, add more in the basket. So delight and one more, delight and one more, delight to what Farooq has got, because he's an eligible guy with a good bureau score. So he's got delighted. For all you know, the branch manager also will come from the NBFC and give a bouquet to him and a mithai ka dabba and all that. So that's like a crazy level of delight for a customer that is understood well. But to me, where the space lies for a lot of corporates is to understand how is it that we can do away with the bad experience.
Great. I guess today we all understand how balancing AI and ease and compliance at the same time, how to deliver great hyper-personalization as well. But what's important is, I think, accountability of not just the company, but the customer. At the same time, the ownership is also lying with each and every employee in the organization to deliver that relevantly for the customer. So with the time that we have right now, we would love to take a few questions from the audience for both of our panelists. Yes, sir.
Yeah. So the home loan product, like how it is today, so had the COVID, and nobody should wish like that, had the COVID would have lasted for another 4-5 years, everything would have become digital. The land records started becoming digital at that point in time. Telangana started doing it for the first time, then Karnataka did, and followed by Maharashtra, some district in Maharashtra. So while the land records remain digital, but they're not used for title report when it comes to home loan, as per the RBI. The public sector banks fundamentally have very low flexibility when it comes to title report, which is based on a digital land record. So they insist, even if you have a digital land record kind of input, but they want a stamp and a confirmation from the collector. So that's one. So is there an ability to, I'll just break the question into two. Is there an ability to do everything digital? The answer will be always yes, because we don't know. We underestimate the power of tech. We obviously, if you were to look at it 50 years back, how the trends were, everything is changed from whatever and however we use information. Are we doing it today? No. So the home loan is not fully digital at this point in time. The reason for that is RBI has a certain guidelines. It's a secured lending. Unlike personal loan, it's an unsecured lending. I look at your bureau score, and I don't have to look at your bureau score. I can just like your face, I can like your name, and I can give you 25,000 just because your name is nice, or whatever logic I follow as a fintech company or as a NBFC. But it's even that piece is getting regulated, but it still doesn't require a physical interaction. It can be done fully digital. When it comes to secured lending, which is a case with home loan, RBI has a very clear framework on how you have to have a legal title report coming in from a third party, independent party, how you have to have a technical report coming in, and basis that how your credit manager would be able to do a certain LTV. What they've digitized is the onboarding part of it. What they've digitized is kind of a KYC, which is without physical interaction. During COVID, they were doing video KYC. Even now, they do video KYC, which is okay, only there's a certain threshold on the value of the loan. But that's the answer. There is 100% possibility of doing it. The RBI today doesn't allow few things to be digitized. And it is also not applicable to all the states. So few of the states are ahead, few of the states are not there yet. So those land records are not there, particularly anything which is unconstructed or recently constructed, those self-made houses, those records are not there. So if you're making a self-house and then you're selling one of the floors there, which is also a case in Tier 2 and Tier 3 cities, those records are not available as to how much is the square feet and all that. So how will you validate? And hence they require a collector and an agreement to happen, and the physical agreement has to be deposited with the bank. So there are broken pieces, and which is where the scope for innovation will remain.
Yes. Any more questions from the audience? Yes, sir.
I think we have not spoken about what happened. Customer has been given loan and post experience, because post experience very bad. In any sector, you onboard, you take money, and then the customer keeps struggling. I think that has not been spoken about.
So I touched upon that point in a way that we have broken the complete process end to end. This is very important because you will get the first time customer, but you will not repeat customer if you don't have a good experience. And for that, what we have done at our company is that we do two types of, one is proactive approach, which I talked about. Let's say as an investor, what is my expectation? Let's say I'm going to some mutual fund. I have selected one scheme and I want to invest. When my account is debited, as a fund house, my job is he get the right time investment, right valuation and right investment account statement with all validated data. That's his point. So for there are two parts. One is transaction reporting, third is funds movement. Now this we have broken in the three pieces. One is on a front end, mid office and back end. And here we have in-house control system we have developed so that we don't get a complaint. But you will get a complaint because whatever process you will define, usually it addresses your 95 to 98% transactions. 2% you will have exception. Now when you get a complaint or a call on your call center, then we do 80-20 analysis. What we do is your 80% calls are addressing your 20% concerns. Now that we need to analyze. For that we do PDCA process, means plan, do, check, act. We have defined the process, we follow the process, then we create a dashboard, then we try to understand what is happening, why these calls are still coming. And then we act. Act means we'll address for 80% of your queries or a complaint which have came to our call center or email unit, and then we try to improve it, how we can reduce it. So that's a process we are using. I think this concept is similar to across business.
No, I was more concerned about the NBFC in Fintech, because if you go for the Fintech lending, be it retail lending or for auto loan or car loan and all, you see after you've taken the loan and when you go for your closure of loan, they call you at the branch. The foreclosure is also physical. When the money has been transferred to the bank account, loan has been fully closed, why should I go and visit the bank for the purpose of foreclosure or for taking the ODU certificate? Then it's a hectic process. So that's why I've seen in the lab and the other personal or some secured loan, still once the customer has been onboarded, then the service is not good. Because it should be very quick, because you need to go through ombudsman process and all. I think the Fintech or the NBFC should make more customer approachable, I think the customer service. For everything they want to come back. Right now I'm getting emails regarding this one, the interest rate cut. Okay, then they are saying you have to come to the branch and do this resetting. So why these kinds of instruction cannot be done technically, and it should be more faster, that I have the option. Like just as SDFC called me that you had the option to reduce your rate. Why? You tell me, anybody will reduce it. See, customer always want reduced rate of interest. Why you are waiting for me to come back to you? RBI has cut the rate of interest, now you come to me. So that kind of services we are not getting from the NBFCs. That's my experience.
So I just would like to answer this question. So you might have got the first DLG guidelines today. Most of you have seen that. In this era right now, we are, sometimes, when you go to school, you need a teacher, you need a principal, right? Of to teach you certain things. So be it NBFC, be it Fintech, we do have governance where now with the new guidelines coming in, we need to be very transparent to the customer. What are the fees when you close a loan? The NDCs are getting nudged automatically before you even come to us. Even if I'm changing the pricing or the limits of a customer, it has to be giving you a heads up before we change it. So all this comes with the learning and maybe little gaps of what is happening in the ecosystem of last 20, 30 years. So everything is evolving. I completely agree with you that, post facto is not nice. Some of the firms, and always in the fintech space or on the lending space, it's a very common saying. as lenders, customers hate you. So we try to bridge the gap by driving through AI, experience, speech analytics, understanding, segmenting the customer really well. And the last piece I want to say is that if you really want to know your customer, why is he unhappy, call them over. We did this event called Fibe, which basically means we chose our first customer who took a loan, and also the customers repeating a loan, called them at our office, spend a day with them. Almost 100 customers came to office with their family. We, give them a full experience of understanding what went wrong, what went well. And to a surprise, what speech analytics threw or the AI threw, it was completely different than what the in-person was trying to say. So sometimes we need to do this. Like you just expressed your concern, I think that these kind of experiences needs to be worked or carved like that. So there would be some differences, but I don't think it will be completely solved in terms of all problems for the customer. But 98, 99% should be solved by learnings and experiences what everybody shares.
See, the regulation is there. It's not the regulation is not there. But actually it doesn't happen. With most of the big companies they are following, but I think average size companies or mid-sized companies, they don't bother. Till the time you've given your check, they are after your life. Once a check is given...
It's like a construct. It's a kind of a culture construct or whatever you say. I mean, you welcome a new employee with a little bit of fanfare, you'll gift and all that. If somebody is serving, notice period, you'll do a senior guy, you'll give a farewell and all that, but you may not do it for all. So it's according to me, it's more of a cultural. If you go to a mobile subscriber and you say you want to port it to another one, there'll be always these hurdles of not letting it go. When it is coming to closure of the loan, like you were saying, they're insisting to come to the branch for the smallest thing. I think there is not enough incentivization. If I'm a bank, I would probably value a customer who's completed the loan. And I'm not part of NPA, I'm in fact part of a good loan that I've closed, right? So there has to be some level of gratification. I think it's inbuilt in Indian corporate to go for maximization whenever you can. It's inbuilt in the thought process that you have to give the lowest and the best attractive offer to onboard a customer. So I think somewhere the customer gets it way that advantage ahead, and which is what the corporate try to, and that's why they don't auto improve the ROI. They will want you to have some trigger, something you would do eventually to make the ROI reduce. So I think it's more to do with a larger way of how we adhere in values when it comes to it's in a spirit of these guidelines. It's just not what is written on black paper as to everybody has to disclose, but it's also in a spirit how the corporates go about the customers.
So how do you take care of this in the lab product? If your customer is going, how do you handle that?
So we take care because to be honest, we think there is a lifetime value to the customer. So we more like a wealth management thing. So we look at a customer as an account who will create wealth over a period of time. So hence we service thinking and maybe with an aspiration that we want to do more and more business with this customer, have referrals. And that's how we solve it.
Sorry, I'm cutting you. I think as per my experience, in the home loan, there is no dedicated RM, unlike in bank. So you don't have an RM dedicated to a customer in the home loan, right? That's why there is a lot of communication gap.
No, home loan is a front-ended exercise, right? Then it moves into different departments. So then it goes to collection and operations part of it. So one is the acquisition part of it, which is where you will have a RM kind of approach. The same person, home loan executive.
But through the life cycle, do you have a RM? In bank, you have a bank RM who takes care of account. In home loan, I have not been called by my RM.
You will not be because it goes to operations then.
Yeah, that's exactly the problem. The customer issues are not sorted out. And when you make a mail to a customer care, it again bombards you another email and the email keeps on going for 7 to 10 days. So that I think it should be improved because there is a huge amount of money being paid under home loan. I mean, the kind of interest which is being charged is high.
I don't give home loan, we facilitate it. We like the policy bazaar of home loan, but your concerns are right. But bank doesn't make that much of a money. It's more the carry, 20 years. It's regulated. So a bank typically will stay with a PLR-driven ROI. Otherwise, it becomes very unattractive for customer.
But as a customer, we are paying 3 times interest. So we are more concerned.
I think
That's
this,
why you see there are too much of home loan transfer, which keeps on happening in the banks and NBFCs.
like, this will addressed over a period of time. I think it's valid point. Everyone has experience, but you just see the way consumers are making aware themselves. I think it will improve. It's a matter of time.
No, but actually we get irritated. I'm telling you, I have no time to deal with any customer care. You know, one of my credit card, they charged me 350 rupees, which was enhanced to 700, and then after a year my civil was dropped, and I kept calling to the people, and it took hundreds of calls to resolve that query, being a lawyer. And I don't have time to go and sit and talk to those customer care people for 2 hours. They'll just keep on escalating. Okay, I'll escalate my call to the manager, then another manager, then the call got hanged, then again you will call. You don't have that much time. So this is not a customer case, actually customer. Customer has to mer.
I think
It's a good name which is given
what
here.
I am also
So
customer of many
when we
banks.
talk
Just to
about-
update, you follow escalation metrics in a right way. I think you will get address right. You need not to talk. My experience, I have dealt with.
No, mutual
I
funds
have
are
deal,
still-
no, I am talking on banking side. My experience, I have dealt with SBI. I have dealt with other banks. You follow the escalation metrics which mentioned in their grievances policy. If you follow, I think that
No,
matters.
what I follow
it
physical
will
is
take
good.
time.
No, physical is good. Go branch solve. This customer care calling is not easy. So what you're talking about tech partner, I think this doesn't solve any problem. And they're happy to cancel my card. I said, cancel my card. They're happy to cancel, but not to resolve the query.
Yeah. We planted this question so that the session becomes exciting. So on a lighter note, so thank you, sir. I completely agree with these challenges that are there, and like sir said, it definitely will in the coming times. It will become much smarter to resolve these problems, and that's why AI is coming in so fast. So it was a great insight from both of you, and I hope we added value in today's session. So thank you for being a great audience. See you in next time.
Thanks, Farooq.
Yep.
Check. I would request you all to please be on the stage. How was the session, guys? Good? Give them a huge round of applause. And now I would like to request Shraddha to please come up on the stage, who is the founder of Krypton. Let's welcome Shraddha, guys. Come on. Woo-hoo! And we will now felicitate our moderator, Farooq Patel, Head Customer Experience Fibe India. Thank you so much for your time, sir. Thank you so much. Then we have Pramod, Kathuria, founder and CEO, Easiloan. Let's give it up for Mr. Pramod, guys. Then we have Mr. Hitesh, Thakkar, Chief Operating Officer, ITI Mutual Fund. Thank you so much for your time, sir, and wonderful session. I would now request the panelists to please take a group photo.